I solved these question papers and send our group. And the notes also. So pattern is like this. There will be 5 questions. Question number 1 will be problem for 10 marks. Now there are little changes made. Problem because last year onwards they started the new education policies. So therefore problem 1 for 10 marks. There is alternate choice for this. There will be or one more problem for this. Question number 2 again problem for 10 marks. Then question number 3 problem for 10 marks. Now they are asked the problem and they are asking the problem here. The paper is already given and say I will send this thing. Madam have made this paper scan, then you will get this link. Question number 4. There is a 25 marks. So 25 marks question there. So there will be once again problem and theory questions. Theory plus problem. Because it is a compulsory paper. And question number 5 also 15 marks theory questions. You have to attempt here 5 into 5 like this. 5 into 5 and this will be 3 into 5. Attempt any 5. So like this there will be 40, 60, 40, 50, 60, 70. 70 marks will be there. So we'll see these things now. They will ask you the problem on common size statement, analysis of financial statement. So at the end of academic year, they can prepare the various statement. In that statement, first will be they prepare fund flow statement, cash flow statement, ratio analysis. So these are the tools which can use. And apart from that, they can rearrange the balance sheet as per the Companies Act 2013. That is, first will be, they will give to you vertical balance sheet and income statement, vertically they can prepare. So in that, they can ask to you common size statement and comparative statement. Common size balance sheet and comparative balance sheet. Like that they can give to you. They can ask to you. So in that, we'll see which is asked the problem here in this connection. That is common size balance or common size income statement. First, vertical income statement, how it is. Just we'll see here. The vertical statement which is given to you is like this. Vertical statement, income statement. So on the top, they can write the name of the company and income statement. Income statement means trading profit and loss account. They are not may prepare horizontally, but they prepare vertically. Correct? Cost of goods sold. How to ascertain cost of goods sold? So it will be opening stock. So it will be opening stock. Then add purchases, less return if any. Then add wages, add carriage inwards, or the expenses which are debited to trading account. Correct? Then you take this total of all this totaling and from that less closing stock. Less closing stock. From that closing stock, you'll get there, just see here, then you will get there net cost of goods sold. So first will be opening stock, add purchases, add wages, add carriage inwards. The total will be there. From that closing stock is deducted. You will get their cost of goods sold. From net sale, cost of goods sold, you'll get their gross profit. You'll get here gross profit. So here there will be 10 marks and answer is in front of you. You'll get the answer, net profit amount. First, sales less cost of goods sold, you'll get gross profit, then less operating expenses. Operating expenses. Operating expenses will be administrative expense or office expense. Then another will be selling and distribution expenses. Then finance expenses. So that can be deducted there. After deducting, you will get their operating profit. Profit you will get. From operating profit, you have to deduct once again income tax. Then profit before tax. Then less tax if any, profit after tax. Net profit after tax. This is the format which is given to you. Now, they asked here, these are question papers which is scanned and will send to you. All this is already scanned there, they will send to you. And the other notes are there. So last year you have been presented, no? Last year?
No, this year was.
No, no, last Sunday, Allah Ta'ala.
No, I didn't.
Huh?
Last Sunday.
You're
But
not
I have online. I have attended.
attended, no?
Yeah.
So in that distinction between cash flow and fund flows, they ask for 10 marks here. They ask here 10 marks. 10 marks they ask here. Now just we'll see. They are given to you here. The problem is like this. Just see. They asked you first will be in this connection on 31st March 2023 profit and loss account of Rajay Limited, Amravati. So they are given the trading profit and loss account for 2 years.
Okay. For 2 years.
2 years they are given. Means first will be 21, 22, 22, 23 like this. 2 years they are given like this. From this we have to rearrange this in this form. Income statement. This is trading profit and loss account, means instead of trading profit and loss account, they call it as the income statement. Vertically you have to prepare. So okay. Now from this, just we'll see here in this connection, we have to prepare this. Then how to prepare for this? First they are given to you comparative income statement. And another they are given, or for this, the above will be common size income statement. Correct? Preparation of common size income statement is very easy task. Comparative means you have to ascertain and use the calculator for every times. Correct? Therefore, both these things, just see. This is income statement. It is common size.
Okay.
Common size. Then what you have to do? You have to take particulars, year 21, 22, then percentage.
21, 22, 23, 24.
Like this. First is 21, 22, then percentage you take. Then 22, 23, and percentage in sales. Correct? So for common size means consider sales is 100. What you have to take? Sales will be 100. For common size income statement, sales is 100. Correct? And for common size balance sheet, consider the total of balance sheet is 100%. Got it? So just see, they are given here. I told to you, first will be the sales here.
Yeah.
Sales is given to you here 11 lakh 4,000. We are consider it is 100%. Then 22, 23 is given to you 14 lakh 88,000. Consider is 100%. Correct? 2 years balance, 2 years trading profit and loss account given. One is given to you left hand side and right hand side like this. They will give it, or continuously they will give 21, 22, 23, 23 like this also. Then sales were taken considering is 100%. Drawn a line for them. Then less cost of goods sold. In that cost of goods sold, they are given to you opening stock. Opening stock is 96,000. Correct? And here opening stock is also 96,000. Then you have to percentage to sales.
Okay, that from that 100%. 10% we have to
consider
percentage.
then percentage. 96,000 divided by 11 lakh, 4,000 percentage.
Okay.
Direct you have to use this thing. Just try for this. So 96,000 divided by here first start
96,000
divided by 11 lakh 4,000. 11 lakh 1104 11 lakh 4,000 percentage, directly percentage here, direct percentage. How much you'll get?
96,000.
No, 96,000 divided by 11 lakh 4,000. 4,000. See, 96,000 divided by
So 8.69%.
how much you'll get there?
8.69%.
8.69%. But there are some figures, two digit figure you have to take. There will be more than 5, correct?
Yes, so 9%.
Means 8, not like that.
Okay.
Only just add 1 there. If there is more than 5,
69, then 70 are
70 you take like this.
Okay, okay.
0.5 or more than that, you have to add 1.
Add 1.
Means it comes to 8.70. 70 percentage.
Okay.
Got it? One thing will get there.
This will be the comparison between these and
That year,
100%.
100. Correct. Then next year, they are given to you, opening stock is 96,000 here.
Same 96.
96,000 divided by, you'll take there 96,000 divided by, this total sales is 14 lakh 88,000. And direct percentage, you write. 96,000 divided by 14 lakh 88,000 percentage. Percentage.
Okay, 6.45 meaning
Correct. 6.45 percentage. Got it? Therefore, you have to show like this. 96,000, 8.70%. Then 96,000, 6.45%. Then next, add purchases. Purchases is 5,76,000. Then 5,76,000 divided by 11 lakh 4,000. You will get their percentage. Correct?
Yeah.
Then here is 7 lakh 20,000. Got it? Then opening, then purchases. Then add wages.
So everything will go on that sales thing.
Sir,
100%.
100%. Every time you have to divide it by this figure
With that.
with the sales figure.
Yeah.
Correct? Then here 5,76,000 divided by 11 lakh 4,000 percentage directly multiplied by 100, then like this. Don't directly percentage with it, you'll get correct percentage here. Because percentage to sales you'll get there. Then after this, add wages 48,000. Then here purchases 7 lakh 20,000 and 72,000. So that percentage also you take there. Then add carriage inwards. Carriage inward means, just see here they are given on your side.
All amount is given.
All amount is given. See, opening stock, purchases, wages, carriage inward.
Carriage inward.
Because these are the items on the debit side of trading account.
Okay.
All items you have to add it.
Add.
Correct?
Yeah.
So just see here. Wages, add purchases, add wages, carriage inward. Then you will take this total. Less closing stock, which is given on the credit side.
Okay.
Then credit side, you will get
Closing
there.
stock also they have given.
Everything.
Figure has given.
Yeah, every figure is given. Just see.
Okay.
Trading profit and loss account they will give to you.
Yes, yes.
Everything is given. Then here you have to take their less closing stock.
Less.
Then you will get here net cost of goods sold. This total. Then from 11 lakh 4,000, if you deduct this 7 lakh 20,000, you will get their gross profit or gross margin. 3 lakh 84,000. And this answer is in front of you. Just see. Answer will be there. 3 lakh 84,000 and this will be 6 lakh.
Yes, yes.
So therefore there will be 100% surety for this because answer is in front of you. Gross profit. But instead of horizontal, you have to prepare in vertical. Vertically you have to prepare. Got it?
Yes.
Then next. Then less operating expenses. So this is the format. So format is given in your book also.
What is that operating expenses?
Expenses, they will give.
Under that what comes here?
Profit and loss account. All profit and loss account expenses given.
Okay.
Debit side. See, in that they are given salaries, then postage and telegrams, advertising, transportations. Got it? Suppose they are given income tax, you don't take income tax. Later on, you take income tax. So therefore, just see, less operating expenses, salaries, then postage and telegram, advertising, transportations. So this you have to take the total, and from this you deduct this, you will get net profit before tax. Less tax if any, you will get their net profit after tax. And every figures, this figure divided by this percentage, this figure divided by this percentage.
Everywhere same formula.
Same formula you have to use. This is called common size. In common size, they will give 2 years common size. You go on making comparison of common size. Consider sales is 100.
Okay, sales is 100.
100. Okay. Then for common size balance sheet, sometimes they will give you balance sheet for last 2 years. They will give you last year's to balance
Balance
sheet.
sheet.
Balance sheet. But balance sheet's formula is different one.
Okay.
So
This
that
is
is,
just profit and loss account.
this is profit and loss account. Then we have to prepare vertical balance sheet. Just see.
Yeah.
Instead of this problem, if you see these two question paper, they are same thing, only figures are changed.
Yeah.
Only figures are
Yes.
changed here. I got these two question paper here. Okay. Then these are these things. Suppose they ask you, first they ask you vertical balance sheet. Then 2 years. First you have to do here vertical balance sheet for the year ended like this. First particulars, then first year,
Okay.
then percentage.
Okay.
Second is percentage, correct? But format first you remember this thing. First will be Roman one, not sales.
Okay.
Balance sheet there.
Balance sheet.
Balance sheet will be there. Roman one. In that Roman one, application of sources of fund you take first. In that sources of fund, A will be shareholders fund. Shareholders fund you take. In that shareholders fund, share capital will be there. In share capital, equity shares, preferences. Equity shares and preferences. They will give every figure will give to you. But format remember like that.
Okay.
This is the format first you take this. Then after that, you will take their reserves and surplus. Shareholders fund, share capital, reserves and surplus. In that reserves and surplus, general reserve, profit and loss account. Then security premium. You take this total. You will get their net worth. Then add borrowed fund. Borrowed fund. Borrowed fund. Long-term fund. In that investment made, that is quoted non-quick current assets are stock, prepayments. Balance sheet comes, say for example, 25 lakh. Balance sheet comes, say for example, 25 lakh rupees. 25 lakh rupees. And here you will get 30 lakhs. Okay. You can consider it is 100%. And it is 100%. Suppose it is 5 lakh. Then you have to ascertain the percentage. 5 lakh divided by 25 lakh percentage. 4 lakh, if it is given 4 lakh divided by 30 lakh percentage. So like that you can go up like this.
From down to up.
Down to up. Because in sales is the top there.
Yes.
Therefore 100% there. Then figure divided by sales. Here total of the balance sheet divided by figure. Figure divided by total balance sheet percentage. Correct? Figure divided by total of balance sheet percentage. So this is called common size. So at this they are not asked. Common size, balance sheet they are not asked. Income statement, both sides, in both examination they asked like this. You got it? Okay. This is called the common size. Then comparative income statement also. They ask for this. Prepare comparative income statement. For this is R. Just see. This is the R question. Then comparative, what we have to do? So just see. For comparative means first same thing. On the top you write the name of the companies. then
Yeah.
comparative income statement for the year ended. Then you take particulars first year, correct? Then second year, means first current year and second year. Then increase or decrease, increase or decrease. Then you will take increase or decrease in
So
percentage.
it has to be compared. Or
Compare,
it is increase or decrease.
decrease, comparison is there.
Okay.
It is not a certain a percentage. Got it? Then see, this is the question they ask for this. I will show this how to prepare this. This is or for this. Don't do
Either
both.
this or that.
That.
Comparative
Hmm.
or
Is decrease and increase and decrease in percentage. Okay. See, sales 9,20,000, 12,40,000. There is an increase. When there is increase there, you write plus.
increase means the amount has deducted minus.
Means for the current years, deduct the previous year amount. In successive year, you can do this. First previous, then current.
The difference between both the years has increase or either
Decrease,
increase
decrease or
either
decrease. See, here 9,20,000, 12,40,000 minutes is increase. But increase how much? 3,20,000. Then you have to ascertain the percentage. How to ascertain the percentage? 320 divided by 9,20,000 percentage. So check once again. See, you will get it. 3,20,000. You got it. How to ascertain increase? So from 12,40,000, 920 gone. Means you will get 3,20,000 divided by 9,20,000. Percentage.
2%. 3,20,000.
Divided by 9,20,000 percentage.
So
34.78.
Yes.
Correct?
34.70.
Just see, write like this percentage. But you write here plus everywhere.
As it is increased.
Increase.
Whenever it is increased, we have
Plus.
to plus.
Whenever decrease, you have to write minus
Minus.
or into bracket.
Okay. Even at the percentage.
Percentage also same thing. Every time you have to figure increase or decrease figure divided by previous year figure. Percentage. Got it? It is very easy. Easy to remember but easy to forget also. You have to touch for this. Got it?
Yes.
Then next, see, sales I taken. Then less cost of goods sold. These are the different figures are there. See, opening stock 80,000, 80,000, no increase, decrease.
Only we have to remember whether what is to be added and what is to be left.
Like this is the format given.
Yes.
It is book format is given. Format is there.
Yeah.
So this is the pro formas. Then opening stock, add purchases, add carriage inward, direct, same figure. Only figure change.
Different, difference,
okay.
and then we take as a percentage.
Now just see 80, no increase. 4 lakh 80, 6 lakh, 1,20,000 increase. Therefore, 120 divided by 480 percentage. You will get this thing. Then carriage inward like that's 40,000, 60,000 plus 20,000 because 60 20, deducted 20, 40,000. Then 20,000 divided by 40,000. You will get 50%. Then after that, less direct wages. 80, 2 lakh, 120. 120 divided by this, you will get percentage. Then closing stock, deducted. Then you will get cost of goods sold 6 lakh. From this deducted, you will get gross profit 320. Everywhere you have to increase or decrease in percentage. So like this you have to prepare. But you have to give comment on this. For comparison, they asked comment.
Comment. So what will be the comment?
Comments, just you will see. Comments. So the above mentioned profit and loss account of ABC Nasik indicates the variations in individual items of 22-23 compared to their corresponding figures. Sales increase. Sales is increased by this percentage.
Yes.
Correct? Then cost of goods sold, then you take their purchases is increased by 25%. Then carriage inward is increased by 50%. Direct wages is increased by 150%. Then closing stock is also increased. So gross profit as compared to the last year or previous year increased by 56.25.
Everything we have to by the
bifurcated and you have to show
Sure.
this. Therefore, it takes little more time as compared to this. Therefore, common size you have to attempt questions. Got it? So just see, this is in one question paper. Just see in one question. This is a question paper. They ask income step first. They ask TJC. On 31st March, ABC Limited Nasik follow profit and loss account. You are required to compare. Compare means comparison, increase or decrease. Common size means sales 100% or balance sheet total 100%. Correct? Percentage to sales 100, percentage to like this, mentioning this thing. After this or they ask to is just see, you are required to prepare common size income statement, profit and loss account for the year ended 22-23 to the above example. Means same you have to take the figures and prepare a common size. Common size is first will be particulars, first year figures, then percentage, then second year percentage. Everything you have to give.
Here there is increase and decrease.
Decrease like this. You got it? So such types
But
of
this thing, the problem will be same.
problem will be same. They can change the figures only. Means see, if I refer, if
No,
you
if they give this format stating that either you do the common size statement or comparative.
comparative,
Either this or that we have to.
you have to attempt. Don't attempt both because you have to attempt. There will be 2 and 30 means 2 hours 30 minutes will be there.
Okay.
2.5 years time duration is there. Therefore, if you write, because both are simple, but in that simplest is common size.
Yeah, because we don't want to.
Well, comments is not there. Comments is not there. Writing comments is not difficult, but it will take time.
Comparison is difficult.
Means it take times no to writing line.
Yes.
Correct? And in one page this will be finished. Okay, this is called one thing. That is called analysis of financial statement. Then another we'll see they are given to you. There will be problem of ratio analysis.
Ratio analysis.
Ratio analysis. So ratios they are given to you. So in your book they are given to you nearing to on page number just see ratios. Here on page number just see page number 138. All ratios are given. They are given to you near about 39 ratios. And they can ask you 5 ratios for 10 marks. Mostly, what is the meaning of ratios? I will tell you. The meaning of ratio is a mathematical numbers. It is compared to last year to current years, and that ratio will be in fractions or in full. Correct? So the ratio will be it in fraction or in full. Therefore, there are 3 types of ratio. One will be balance sheet ratio. In that balance sheet ratio, current ratio will be there. Then listen, everything is there in book. Don't. If you referring that book, you will came to know all these things. There will be 3 types of ratio. One is balance sheet ratio. In that balance sheet ratio, current ratio will be there. Liquid ratio is there. So these are very important ratios. Then after that, income statement ratio. In income statement ratio will be operating ratio, gross profit ratio, net profit ratio, then other ratio, proprietary ratio, everything ratios will be there. And thirdly, combined ratios. Combined ratios. Once again, they will give to you here one particular income statement or balance sheet. Accordingly, they can ask to you the ratio. Just see, here ratios is given on this page. Now, so just see, they can ask question number 2. Calculate the following ratios. They will give to you. Just see, they are given to you a balance sheet here. They are given a balance sheet. 1 year balance sheet given. In that balance sheet, just see, they are given to you. You have to ascertain first is current ratio. This 100% they will ask current ratio. Liquid ratio 100% is there. Absolute liquidity ratio 100%. Then current ratio to fixed asset 100%. And proprietary ratio or the other debt equity ratio, like that they can ask you. But there are 39 ratios. Out of 39 ratio, these are the most probably they can ask you 5 ratios for you. Per ratio 2 marks. Okay. Then there they are given us the balance sheet. First ratio is given us to you current ratio. So what is the meaning of first current assets? Current assets are those assets which can be converted within a span of time into cash. It's called current assets. For example, cash in hand, cash at bank, sundry debtors, bills receivable, prepaid expenses, stock or inventory it is called. Correct? So these are all called the current assets. Work in progress is also current assets. Then what is current liabilities? Current liabilities are those liabilities which can be converted within a span of time into cash. Immediately conversion. The current liabilities are sundry creditors, bills payable, bank overdraft, outstanding expenses. So these are the current liabilities. Then current ratio. First you have to write there. Number one, calculation of current ratio. You have to write. Then write current ratio is equal to current assets upon current liabilities. Upon current liabilities. So in that balance sheet, you have to ascertain which are the current assets. So you write the formula, current assets upon current liability. Leave 2-3 lines to writing the figures. Then you take current assets. Which are the current assets? You in these figures you see. In the balance sheet, you have to ascertain the current assets. So current asset will be on the asset side. So just see here, stock is current assets. Stock, for in other words, it is called inventory. Stock, debtors, cash in hand, and investment short term. So you write there, current asset is equal to stock plus debtors plus cash and bank plus investment. Then you put down the figures there. You will be get current assets. Then current liabilities. Current liabilities in this problem will be, just see, sundry creditors, bills payable, bank overdraft. These are the three current assets, current liabilities. You have put the figures in that. First write sundry creditors, bills payable, bank overdraft. Then put the figure in that. By putting that figure, you will get their current liabilities. Then use that figures to ascertaining current assets divided by current liabilities. You will get that. And that ratio, standard ratio, always 2:1. It must be always 2:1. Got it? 1. Got it? Then in this figure, just see, I'll solve this problem. See, I'll solve this problem here. Now just see. First will be. First is question number 2. There is an option for this also. But 10 marks here is also there. It is very easy to score. Nowadays in management accounting, they are scoring many more marks. Out of 70, someone getting 70 also. It is scoring subject and compulsory one. Then you'll see here, current ratio is equal to calculation of current ratio. Current ratio is equal to current assets divided by current liabilities. Then after that, I will leave some space here. Then current assets is equal to stock plus debtor plus cash plus investment. Then stock is 5 lakh, 4 lakh debtors, 1,50,000 cash, 50,000 investment. Then total is 11 lakh. Okay, one thing is what. Then current liabilities is equal to, which are current liability you have to quote there. Sundry creditors. So as per the balance sheet, sundry creditors, bills payable, bank overdraft. Then 2 lakh, 1 lakh 20, 80. Then current liabilities are 4 lakh. Then you have to put here 11 lakh divided by 4 lakh. You will get there 2.75. Is to 1 you have to write. Is to 1. Don't forget to write is to 1. So this is the 2 marks for that. Then another things will be there. Calculation of liquid ratio. What is the meaning of liquid ratio? Liquid ratio is formula liquid assets upon liquid liabilities. Liquid assets upon liquid liabilities. Then which are liquid liabilities? Liquid assets first. Current assets minus stock minus prepayment is called current assets minus stock minus prepaid expenses minus advances is called quick asset, or it is called liquid asset. Quick assets are liquid asset. Correct? Then you write down the first formula, leave 2-3 lines to writing that figures. Then quick liabilities. Which are quick liabilities? Current liabilities minus bank overdraft. minus bank overdraft is quick liabilities. If you're referring this question paper, no, so you'll came to know each and everything. Okay, you got it. We'll send that. We have already scan it. We'll send this. You'll came to know this thing. Got it. Otherwise, you can take for this question paper also for you also. No problem. Then you got it. Now we have to put these things. Calculation of liquid ratio. Liquid ratio is equal to liquid assets upon liquid liabilities, or liquid. Sometime it is also called current liabilities also, if there is no bank overdraft. Correct. But use the formula like this only: liquid assets upon liquid liability. Liquid asset is equal to current assets minus stock minus prepaid expense. Then 11 lakh minus 5 lakh. Prepaid expenses nil. You will get there 6 lakh. 6 lakh is liquid asset. Then liquid liabilities. Current liabilities minus bank overdraft. So 4 lakh minus 80,000. You will get there 3 lakh 20,000. Then you use 6 lakh divided by 3 lakh 20,000. You will get 1.80 is to 1. So the standard ratio of the current is 2 is to 1 and liquid is 1 is to 1. 1 is to 1, it must be. But it is more than standard. See, 1.88 is to 1 and here is 2.75 is to 1. Both are satisfactory ratios. 2 is to 1 standard ratio. 1 is to 1 standard ratio. Both ratios are standard one, quite satisfactorily. These are the two, 2 to 4 marks. Then third, absolute liquid ratio. Calculation of absolute liquid ratio. All ratios is given in that page. 39 ratio is given. Correctly, absolutely they are given and very nicely they are given this collectively at glance. Now, absolute liquid ratio is equal to cash at bank plus short term investment. Only span of time which can be conversion. So your cash balance and short term investment. So in that 1,50,000 is equal to 2 lakh. This is called absolute liquid ratio. This is liquid ratio. Then current liabilities 4 lakh. Then absolute liquid ratio is equal to cash plus short term investment divided by current liabilities. Then 2 lakh divided by 4, that is 0.50 is to 1. This is 2 mark. Third result. Fourth now. So this calculation of current assets, from where this figure you are getting, everything is given here. In that problem, everything is given. In that we can take like this. But you have to know that formulas. Current asset, which are current asset, which current liabilities, like that you have to take. Then next one here, they are given to us. Just see. Calculation of current assets to fixed asset. Current assets to fixed asset. Now you write the formula. Current assets to fixed asset equal to current assets upon fixed asset. Current assets to fixed asset. Formula current asset divided by fixed asset. Then current assets are stock plus debtors plus cash at bank plus short term investment. In that given once again. But you write this because 2 marks are there.
So we have to
Write this first. The next 5 lakh plus 4 lakh plus 1,50,000 plus 50, you will get once again 11 lakh. Already 11 lakh is there, but you show once again you show. Then fixed asset is equal to goodwill plus land and building, plant and machinery, furniture and fixtures. These are fixed asset. The figures for that given in the balance sheet is 4 lakh, 7 lakh, 5 lakh, 2 lakh, 18 lakh. Then you have put 11 lakh divided by 19 lakh. 11 divided by 19 lakh. I made mistake, I think so.
Gross asset upon
No, so
divided by fixed asset.
no, I made mistake here. This total is 11, 5, 16 and 18. So instead of right here, I made mistake here. 18 lakh it must be. I would put it 19 lakh. Then you see that how much it is. 11 lakh divided by 18 lakh.
Percentage.
No, just your certain answer.
61
0.61. Na? Then you write here 0.61
is to 1.
is to 1. I made a mistake here. I taken 19 lakh therefore. So 11 lakh divided by 18 lakh. You will get there 0.61 is to 1. Then last one. Calculation of calculation of proprietary ratio. They asked you, fifth number. Then proprietary ratio is equal to shareholders fund divided by total assets. Shareholder funds means equity share capital plus preference share capital plus reserves plus profit and loss account. 12 lakh, 4 lakh, 1 lakh, 2 lakh, 19 lakh. Then total assets is 29 lakh. Total assets they are given. So just see, asset side total is given to you.
There is no formula for the
Total assets.
What total asset is that?
Correct, they are given now total. This is a total asset.
Okay, that amount has to
29 lakhs. Asset side total, we have to take this. So it contains fixed asset, current asset also. Everything is there. So 29 lakh. Then this 29 lakh yeah, divided. So just see. 20, this will be 20 lakh divided by, here it will be 19 lakh and 29 lakh. Therefore, total asset 29 lakh. 19 lakh divided by 29 lakh is 0.66 is to 1. So this is for 10 bucks. Question number 2. 5 ratios to 2 mark each. This is this thing. Then for this, they will give to you another alternative questions. Or alternative. That R will be, they are given to you working capital. Requirement of working capital. So what is the meaning of working capital? So each and every notes is your detail. If you refer my notes, no, it will be get full percent, 100% mark you will get. It is very nice notes I have drawn this thing. So now just see. Now first you see what is the meaning of working capital. Working capital means for mitigation of the day-to-day expenses. It requires working capital. Correct? Mitigation means suppose you construct a big factory. Correct? And to running that big factory, it requires mitigation of day-to-day expenses. For that factory, material purchase, labor we have to pay money, or its expenses are there. For mitigation of day-to-day expenses, it is called working capital. And working capital is current assets minus current liabilities, working capital. Current assets minus current liabilities, working capital. So in that vertical also there, current assets minus current liabilities, working capital. Got it? Then they will ask you, prepare a statement showing requirement of working capital for the future period. Suppose you have got a factory. Your factory is, you are preparing laptop. You are preparing a factory of laptop factory. In one particular year, you got the production of factory laptop is say 1 lakh laptop. In particular year, if you want to increase that laptop 1,20,000, means more by 20,000. Then what will be the working capital required for the future for 1,20,000? So you know 1 lakh how much you require working capital. Then for 1,20,000 laptop, how much working capital is required? For this, you have to prepare a statement.
It is
Disment. Because see, so it is purchase of decent motor car for 35 lakhs. So purchasing it is for no use. But you have to ride it, you have to use it, put the petrols or electricity, whatever may be. To running that, it requires some expenses. No, that expenses is called working capital. So for this here, for factory too, there are some expenses which required to running these things. Material required, labor required, overhead expenses required, other expenses will be there. So it requires these things. Therefore, how much working capital is there? Therefore, we have to prepare a statement there. How to prepare the statement here? On the top, you have to mention statement showing requirement of estimated working capital. Then you have to prepare here first particulars, then period, and working and amount they will give to you. You have to prepare a columnar like this. First is the particulars, period, particulars first. Then you prepared a column, small column, which is of period, time they will give to you. Then working, then amount lastly. In that format is there once again there. Working capital, in that first A will be current assets. In that A current assets, number one, raw material. Then raw material, you have to take into consideration raw material, they will give to you a small, they will give to you a small cost sheet. Cost sheet will be material, labor, overheads, total cost, add profit, less sales, like lastly sales. So like that they will give to you. Then you take units into rate into period. They will give to you units. Say for 20,000 units. Rate of material is 4.
4,000.
And they will give to you. They will give to you material in raw material in process will be 2 weeks.
Time.
Time they will give to you. So they will give to you in weeks or months or year they will give to you. Got it? So days they will give to you. If they are given days, 365 days. If leap year there, 366 days. Months given 12 months. Weeks given 52 weeks. So like that.
Okay.
Okay. Then units into rate into period. You will take this total. So current assets, raw material. Second, work in progress. In work in progress, take once again raw material, unit rate, period. Then labor, unit rate, period, extra you take there. For labor and overheads, extra half you take once again. Why extra half? Nowadays, just see. Suppose if you want to construct this chair, correct? What is the requirement for these chairs? So first require materials. The next require carpenter or labor.
Labor.
Then other things will be overheads. It requires color and all things. Then we'll consider the cost of this will be, see, material, labor, overheads. Say for example 800. If you sell this chair for 800, then there will not be any profit. No profit, no loss. Therefore, we'll consider we'll sell it for 1,000 rupees. Then profit will be 200 rupees. Like that. Like that it is given. Because nowadays, material, suppose you construct a building, see, there are heavy, large amount of labor is there. Heavy charge, they are charging heavy amount of labor, wages. Wages are heavy now. Therefore, material not to take extra, labor extra half, and overheads extra half. You have to take like this. Because nowadays the labor charge is also increasing.
Yes.
Day by day. Overheads means other means nail and everything requires, then color requires. It is also increasing. Therefore, extra half you have to take. First will be raw material, unit into rate into period, the work in progress. In that A, you take their raw material, units rate, period. Then B, labor, unit rate, period, extra half. Overheads, unit rate, period, extra half. Take the total. Then third will be finished goods. Finished goods at cost price. Means material, labor, overheads, total you take. Means unit into rate into period. For each and every that categorization, they will give to you a period.
Okay. Everywhere
They will give to you the period. Means it remains for 2 weeks. Raw material remains for 2 weeks. Then suppliers for 2 weeks. Then debtors for 2 weeks, like that.
Those 2 weeks they have
You have to take into consideration. Then you take finished goods. Units into rate into total cost of that. Then next will be debtors now. Debtors means at sale price. Correct? Unit into rate into period. That is called the total debt period. You will get their total. Then cash in hand, if any, add it. Prepayment is made any, add it. Then total of A, when it's current assets. Less current liabilities. Less current liabilities. In that current liabilities, first will be raw material once again. Then sometimes they will give you lags in payment of wages and overheads. Then you take there like this. First will be raw material, labors, overheads. Then total of B. Working capital. Current assets minus current liabilities. You will get working capital. Sometimes add reserve for contingencies also. Reserve for contingency. Extra things. Add there or margin of safety, 10%. Then you will get net working capital required. So like this. Then they will give the problem on this for ratio. They will give problem, calculate the requirement of working capital. So just like this. See here, they are given. Question number 3. This is a 2. Sorry, I made mistake. For question number 2, there is a problem of fund flows. Fund flows problem is there. So for fund flows problem, that I will tell to you later on. Then question number 3, there is a problem of working capital, and for this there is a theoretical questions where what I explained the last period. So they are given a problem here, just now I explained, and they are given or define cash flow statement, explain the utility of cash flow statement. So that notes is with me. I will send you. In books also it is there. Got it? So note down in that where we are getting the book by referring this question before, note down like this. Okay, these are the things. Now we'll see this problem, how they will give to you. See here, from the following information, prepare a statement showing the estimate of working capital required. So they will give to you budgeted 3 lakhs, rupees 3 lakh budgeted sales, 3 lakh in a year. Then what is the units for that? See, 3 lakh. 3 lakh divided by 12. Per sales. Therefore 12 months. You will get here 25,000. So these are the units for per month. Got it? This is 25,000 sales. You will get there 25,000. Then for this, here I solve this paper wholly. This. See here, statement showing changes in working capital. Oh, sorry, not like this. Statement showing requirement of working capital. So in that particular period, calculation amount. A, current assets. In that current assets, raw material, 3 weeks they are given. Then 25,000 units. These are the 25,000 units. 25,000 into material rate is 3 and week is 3 by 52. You will get here like this.
That 52 is weeks.
Years. You consider there are, because they are given to you each and everything in years. In weeks they are given. Just see, I will show this. See, they are given to you. Raw material remains in stock 3 weeks. Then finished goods remain in stock 1 week.
Only in week they have.
Week. Month given, months you take. Days given, days you take there. Correct? Period will be days, month or weeks. You consider 52 weeks in a year. Correct? Yeah. Sometimes they will give you, consider there are 50 weeks in a year. They will give in the problem.
Then we have to take that
50 you will take. Got it? So like this. Then these are the things we will start now like this. So this is the format. Current assets A, raw material 3 weeks, 25,000 into 3 into 352. You will take these figures. Then second, work in progress or work in process it is. 3 categories. First is raw material, 2 weeks given. For work in process, 2 weeks for 3 level. 25,000 into 3, because rate is 3, 2 by 52. You will get this thing. Next, labor, 2 weeks, 25, 4. Labor is 4. Multiplied by 2 by 52, extra half. Then overheads, 2 weeks, 25,000 into 3, 2 by 52, extra. You will take this total. Then finished goods at cost. The total cost of that will be articles here. Just see. The total cost is given to you. See, 3 plus 4 plus 3, 10.
Yeah. Total cost.
Total cost. And profit is 5. Means total worth is 15.
15.
Like this.
10 plus 1.
Like this. Okay. Then like this we have to show here in this connection. Finished goods at cost. 10 rupees is there. 25 into 10 into, they are given 1 week. They are 1 by 52.
1 by 52.
Then debtors at sales now. 15 rupees you have to take. Debtors means selling price.
Yes.
If you sold that at cost price, no profit, no loss. No, nobody can doing the business by getting this
No
thing.
profit, no loss.
No profit. Therefore, each and every one is doing the business for earning profit only. Therefore, 15 rupees you take there. Debtors. Then here, debtors mean customers. We have sold the goods like this. See, debtors at sale price 7 week they are given. Means credit allowed for the debtors is 7 week. Within 7 week you have to pay the money. So here 25,000 into 15 into 7 by 52 you will get this thing. Cash balance nil, not given. The total of current assets A 65,865. Got it? The next, let's be current liabilities. Current liabilities sundry creditors. Means sundry creditors means raw material.
No.
Raw material 5 weeks they are given. So 25 3 into 5 by 52 7,212. So then working capital A minus B 65 865 to 7
Minus
to
7,000.
you will get there 58,653. This is the required capital. This is requirement of working.
Required capital.
This is for 10 marks. Got it? So like that it is there. Then they asked you the fund flow statement. In that fund flow statement, in that first flow statement, we have to prepare the first will be statement showing changes in working capital first. Then you have to prepare fund flow statement, account is there. Then you have to prepare profit and loss adjusted account. And as for this thing, this will be also tally, you will get their things. So now we'll see. They ask you fund flow statement in this connection. Just see. Fund flow statement is given to you. Just see. Liabilities by 22 and 23. 2 years balance sheet there will be. Here is also said 2 years. Then they are given from the following information, prepare fund flow statement of Murali Limited, Nagpur for the year ended. Then you have to balance sheet given, then information. What they are given, during the year 6% debenture is redeemed at par. Redeem means making payment, redemption of debenture. Then interim dividend paid during the year is 20,000. Then building purchase during the year is 52,500. So these are three adjustments. Additional information adjustment made. Then we have to prepare first statement showing changes in working capital first. How to prepare that statement showing the changes in working capital? So it is very simple. So here we have to prepare this first in this manner. See. Here, statement showing changes in working capital. First is particulars 31,322, 31,323. Then changes in working capital increase or decrease. First is A, current assets. So on the asset side, current asset they are given to us. So see,
All the figures they have given.
they will give to you figures. In that current asset will be inventory, sundry debtors, bank. So these are the current assets only. Then they are taken here. Just see, inventory 5,52, 520. So there is decrease.
Okay.
Compare it, you will write in the decrease
Before
column.
it was 52 and 42.
Correct. Then sundry debtors 1,47,000, 1,89,000. So there is an increase, therefore write in the increase column. Then bank balance 94,500, 1,05,000, increase once again. You write like this. Then you take the total of A, current assets. So this total 7,66,500, 7,14,400. That's 7,14,000.
Okay.
Then let's be current liabilities. In that current liabilities, sundry creditors are there 126, 115. So there is a decrease, but write in the increase column. Liability reverse.
Okay, yeah.
Reverse you have to do.
It is 12.
Right, it is actually decrease, but write in the increase column.
Because it is liability.
Liabilities. Then next is bills payable 52,500, 73,500. It is increase, but rise in decrease column. Correct? Asset increase will increase, decrease will decrease. But liability is just reverse. Okay. Now we'll take the total. It 1,78,500, 1,89,000. You take the total. Then here working capital A minus B means from this you deduct this, you will get 5,88,000, then 5,25,000. Then what you have to do, which figure is heavier you take here first. This is heavier,
Yes.
you put both side.
Okay. And then the difference.
Then difference you will ascertain. If you get the difference in second column, that is decrease in working capital. If you take that difference in first column, increase in working capital.
So whatever higher amount has to be taken.
And ascertain the balancing figure there. Got it? Correct, you are right now. Now just see, here taken. Then you have to tally this matter also. So just see, if you take this
The figure whichever
higher, means this is heavier, 1,26,000. Put here 120.
And then
Balancing figure you will you will get there.
Same amount.
Same you will get. Instead of doing this, what you take? If you take this figure in the last column,
Same column.
you come here in the first column. If you take the first last column, it must be tallies. So this is a statement. So by preparing this statement, you will get here decrease in working capital. Got it? Now we have to prepare the another. See, first will be adjusted profit and loss account. You have prepared. Mean whatever adjustment they are given to you, you have to prepare there. Adjusted profit and loss account. First is buy balance brought down. They are given to you opening balance 42. Then to balance carried down closing balance 52,500. Then what they are done here, they give to you goodwill. Goodwill is written, there is not given, goodwill written off not is there. But interim dividend they paid. Therefore payment means it comes on the debit side. 20,000. Okay. Then you have to tally this. By tallying this, you will get there 72,500, 72,500. You will get the balancing figure, that is operating profit. That is funds from operation. It is called funds from operation balancing figure. Means by mentioning this, you will get funds from operation by preparation of profit and loss adjustment account. After that, you have to prepare the statement here, fund flow statement. In that first is sources. It is a statement, not an account here. So sources application. Then what is the source here? First, issue of shares. See, how to came to know issue of shares. You will get here. Just see. Equity shares 7,35,000, 7,87,000. It is more amount. Means once again they issue the shares. By issuing shares, they get extra money.
Yes.
Then issue source. Then just see 6% debenture 126,52,500. It is redemption, reduced, paid. Correct? Then they are given here, just see. What they are given to you? Repayment. Redemption of 6% debenture 73,500. So 1,26,000 plus 52,500 reduced. You will get 73,500. Repayment made at par. Okay. Then after that, these funds comes from here or here. Funds from operation coming on the sources. Then decrease also coming here. Decrease in working capital on the sources side. Decrease. Then redemption 73,000. Then purchase of building is given to you. Building purchase, then the payment is going on here. Purchase of building 20,000. Then it will exactly tally.
So all three are depending on the
each other. First, you have to prepare statement showing changes in working capital, then adjusted profit and loss account, and lastly is fund flow statement, sources and application, like this. So these are the things. This is option for ratios. Both are simple.
Yeah, but this the second thing, this is so that ratio has to be.
Ratio you have to remember formula because 39 ratios are there. So like that. Okay, we'll wait because we have to go now. From where you are
From
coming?
Goa,
Margao. Bapre. Last year, last.
1 lady from Malna. But because of road now the problem, because the traffic jam comes to 1 hour, 2 hours, we have to wait on road.
Okay. So
I take the.
नहीं they are take बड़ा बंद करता इंटरना हे करता ते हे पाठवून देता